Hi, everybody. Welcome to Wyckoff Principles in the Recent Markets, a free webinar here in late November 2020. Okay, I'll do it this way. Just the normal disclaimers apply here for the US. This is educational material. We're not advocating any buy or sell or anything along those lines. And you should, of course, check with your financial advisors before making any investments, and so on and so forth. Okay, let's take a look at what we're going to cover today. I'm going to go through some of the Wyckoff principles in the recent markets. We'll take a look at the S&Ps, which is the primary market that I trade on an intraday basis. Sometimes I trade crude, but mostly it's the S&Ps. But we'll take a look at crude oil as well, take a look at a handful of stocks, and then the Great British Pound as well at the end. And we'll also take a look at reading price bars and the Wyckoff principles that are showing up in recent days here on the 5-minute, the hourly, the weekly, and the monthly. Somehow I managed to miss the daily, but it's all the same stuff, no matter what the time frame. Am I 1 month into the future? Did I say October 21? Yeah, sorry about that. I'm thinking ahead. I'm always thinking ahead, Albert. All right, we'll take a look also at multiple time frame analysis. And then at the end of the webinar, I want to talk a little bit about a new course in chart reading, bar by bar chart reading that we're going to be doing starting next week. So let's take a look at yesterday's S&Ps. Much different than today, wouldn't you say? Quite a bit different. So let's take a look and see how we might read this on a kind of bar by bar basis. And one of the things that we do is we wait till we get to the edges. Like, there's no really good trades in here between A and really A and C. Yeah, you could make a trade here if you wanted to. You could make a trade somewhere in here or maybe in here. But those really aren't high odds trades. They're decent odds, but not high odds. The higher odds always come around the edges of the market, where there is some support or some resistance. At least that's the way that I trade and the way that I find Wyckoff used in the best. So you can see that the morning wasn't such a great morning for trading. We're in a fairly narrow range, although it's a 20-point range from about 400 down to 3380. So not bad. The volatility, the recent volatility over the last, I don't know, year or so has been pretty good for trading. So even range-bound days like this one you can do some decent trading. Anyway, look at what happens when we get up here to C. Notice that we're coming along in here up into this area here, and the volume is picking up, and we get strong volume on the Weiss wave. And by the way, this is a 5-minute chart, so we're intraday trading here. Standard volume, and then this is the Weiss wave, which is a proprietary indicator developed by my mentor, David Weiss, who's an expert in the Wyckoff method. And basically what the Weiss wave does is it accumulates the swing volume. So for example, you can see, let me just take one example here. So from this low here, which occurs on this, up to here, we have the volume on this move from here to here, or from here to here, accumulated in this wave. And then down here, well, let me pick a better example here. You can see from this point here, just right here, down to about here, we have strong volume on the Weiss wave, indicating more selling coming in. We get a small bump up to this point, which is a wave up, and that's represented by this small amount of green, or green wave here. and then we start coming down again. So that's basically how the Weiss wave works. And why do we do waves? Well, because Wyckoff taught us to think in terms of waves. I'm not going to get too deep into that today. That'll be a subject for the course that we're doing, but it's useful to think in terms of waves. Here it's not so important because the waves are all basically equal in a trading range until the end of the day when they get larger, or when the down wave gets larger. Anyway, let's get up into here. So we come up to C, and I get good volume on this bar that is represented by this. Now we get more volume and more volume on the next two bars, and yet we're not going anywhere. As we would say, the thrust is starting to shorten here, okay? So an aggressive play would be on this bar right here, a short right here. I would, however, wait a little bit, and 10, 15 minutes go by, we come down to 1, and that's represented by the volume down here. The volume is picking up to the downside, meaning supply is entering the market. And then what do? We wait for a weak rally, and that comes on the very next bar here, bar 2. Low volume and what we would call a hidden up thrust, or just a weak bar in here. So we'd short on the close, put our stop up above here somewhere, and we would trade it down. We would get down to about, how would you set, I got a question here. Yeah, and ask questions as we go along, by the way, because it's hard to go back and remember what we were talking about, or come back and flip through charts and stuff. So ask questions as they come up. What's the setting on the Weiss wave? We've been using 3/4 of a point since I've been using it. I started using it in 2006. So that's the reversal. So that comes down here. Notice at 3, we start to see volume diminish as we're trying to move down. Price isn't going down anywhere. There's a good signal to exit your trade if you haven't exited. Cover your shorts if you haven't covered them before. We start to see buying coming in on 4. And we try to go down again on 5, but a little bit of buying comes in. You could draw a line along in here if you wanted to. Bar 6 is fairly important. No supply down there. Minuscule volume as the market tries to go down. Also, we've been trading sideways for however many minutes this is, 5, 10, 15, 20, 30, 40, 50, 60, almost an hour sideways here. And then the market pushes up on bar 7. We see volume come in. And what we're interested now in is just a little bit of a pullback, and that's where we take our long position, right? I'm not trying to buy the low tick. I couldn't give a good god darn about buying the low tick or selling the high tick. I'm interested in choice trades. Choice trades come when I can read the market cleanly and clearly and see that the flow to the downside has gotten really poor here. And if the flow down gets poor, then if the selling to the downside gets poor, then buying to the upside is going to get good. We wait for that. There it is. And that's where we enter in here. Okay. Trade it up to the top. Back up to the top there. We start to see price pulling off of the highs here, closing off the high. We come down to 8. There's really no supply in here, looking like it might try to break through. But then look at what happens on bar 9. Very large volume, pretty good volume. We haven't seen this kind of volume in a while, and it goes nowhere. There's a lot of buying trying to be put into the market. We know that from the volume, but the range is telling us that sellers are in there and stepping on it, right? They're trying to cap the market in there, trying to hold the market down. And the question is, are they going to be successful? Well, bar 10 tells us that they are. Again, high volume, and we come back up, test the highs along A and C and E here, but fail to penetrate through. And we failed to penetrate through that resistance on two bars of really good volume. Hey, if we're not going up, the downflow or the upflow is not happening here. So if we're not going up, sellers are going to get into control and we're going to go down, and that's exactly what happens here. I didn't give an exit here, but I would take it off at this point. Not a lot of volume, but that price bar back into support suggests a little bit of climactic action. The market does continue to go down after that, but that's a nice little trade in here for however many points that is, a good 8 or 10 points anyway. Okay, some questions have come up. Good, I love questions. I wanted to ask, how would you set it for, say, something like Bitcoin? Oh, I have no idea. Ethereum, I don't even know what Ethereum is, which are cryptocurrencies. Yeah, I don't trade, I don't even know what cryptocurrencies, how to even, where they're even traded. I don't trade them. You know, I'm sorry, I can't answer that. Is it the same when you want to short the stock? Yeah, we'll talk a bit about that. We're going to look at some stocks in a minute, Michael, or Michelle. Sorry, excuse me. I didn't mean to mispronounce your name. What's my lot size? That's personal, Andrew, just as it would be for you. Would you have shorted 10? 10. Yeah, that's the short right there. That is the short. I mean, it's not clear-cut VSA set up like an upthrust or a spring. Rather, it's no demand. 10 is supply coming into the market, followed by effort to rise and not able to go anywhere, all at resistance. So that's selling coming into the market. Clear as day to me. Clear as day. So who's asking this question here? Albert, yeah. So Albert, look at, take a look at similar situations where the market comes up to resistance and see what happens in that area. Read the price action in that area and see if you don't start seeing patterns appearing similar to this or consistent with something like this. What can deteriorate Wyckoff and Weiss wave? Volume not enough, stocks being too new. Oh, I think what you're asking is what market should you be trading for this? Look, I know there's a lot of stuff out there. When I first started trading, the IBD hot list were the big stocks, right? I would really encourage you just to avoid that stuff, cryptocurrencies and all those new things. I'm sure you can trade them and make money at them and all of that, but I would stick to the markets that are highly, highly liquid, traded by lots and lots and lots of people. And those things tend to be the market indices like the S&Ps, the NAS 100, the Dow 30, YM, NQ, ES, those kind of markets. Crude oil is good, the bonds can be good, the 10-year notes can be good, and a few other markets like that. Now I'm talking mainly for like day trading and swing trading. You really want active liquid markets. Cryptocurrencies, I'm just not, I don't know what to tell you about those. It's just not my playbook. Okay. Do you only teach this on stocks, not Forex? I don't trade Forex. I don't know those markets as well. We'll look at the British pound, which is the futures. That's the inverse of the Forex. But you can certainly do this on Forex. Look, everybody, you got to step back and understand this stuff is applicable across all time frames, all markets that are freely traded and that are actively traded. So, if Forex is pretty actively traded, although it's not as transparent as everything else, which is why I don't trade it. But it works in all markets. It works in all freely traded markets. Would I consider bar 9 as a test? No, because of the high volume. That's effort versus result. What I have noticed lately is that pre-market between 7:30 and 9 has been offering nice setups, better than, well, I wouldn't say better than the New York session, but I trade from usually the hour before the US Open, hour and a half before the US Open. And you can get some nice trades there. How confident are you that you're seeing the complete volume picture? Isn't there a lot of volume in dark pools? Yes, there is, and there's also algorithmic trading and all that sort of stuff. None of that makes any difference. None of that seems to make any difference. But if if that's what you're worried about, there, like David, myself, there are hedge funds that use this method, and they're all using the same data that we are. They don't have any special insight into the data. With the volatility in the market these days, how many points a day is attainable for somebody starting out? Oh, that's a good question. I mean, you can pick up a lot of points during the day if you're a good trader. But somebody starting out, just make it simple. If you could make, I don't know, 2 points in the morning and 2 points in the afternoon, 4 or 5 points a day, which is highly doable in this volatility for sure. And you can scale that in any way you want. You could be making $500,000 a day, a year, no problem on 4 points a day. So, that's what I would say is I would try to focus in on if you're just starting out, trade small, trade only the things that you are comfortable with. If it's a spring or an upthrust or other things, don't get seduced into trying to trade every little wiggle and waggle, and make your targets small. Don't go for the big targets. And build up your account and build up your experience. As you get more experience and you get a larger account size, go for bigger targets, and you can start adding in as well. Is no supply and no demand bars just opposites? Sort of, Jeff, excuse me. Sort of, Jeff. It depends on where they occur. But in general, yeah, the no demand is the opposite of a test or a no supply. Is that an upthrust 4 bars to there's no, well, maybe an upthrust here, an upthrust of C, yeah, kind of. It's small though. No supply after a downtrend and no demand. It's not that simple, Jeff. You've got to piece things together. But generally, yes, in that sort of broad brush, you're looking for towards the end, at the end of a downtrend, if you're pretty confident that it's over with, then you're looking for testing. At the top of a trend, when it's exhausted or climaxed, then you're looking for no supply. How would you describe Wyckoff terms in the opening overlapping bars? That's what I'd say. They're overlapping bars. They're not going anywhere. Congestion. For Forex, do you need to apply futures market? No, you can do it with tick volume. Do you trade all day? Sometimes, but not usually. Okay, let's keep questions consistent to this. We're going off on tangents now that, I'm happy to answer those questions, and I'll do it afterwards. I'll stay as late as you want for questions like when do I trade and how long do I trade and blah, 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 that sort of stuff. But I want to get through this. So let's get on to the next chart here. All right, let's jump over to crude oil. Again, we're on a 5-minute chart here. And this is the same as this was yesterday. And notice that crude is trending here, right? So there's always a trend somewhere, which is useful to remember if you want to jump around to different markets. All right. So while the S&Ps were in a trading range yesterday, the crude oil was trending. So we see strong demand show up on the Weiss wave here, up to B. Okay, so now we're interested to the long side. And so all of this and the market going up represents demand coming into the market, okay? aggressive traders could trade down in here. We see the volume drop off. The Weiss wave drops off to the downside here as the market comes down. Kind of tricky to trade that though. There's no real support to lean against. Market rallies back up to D. And again, I'm showing you the higher odds trades here, not the aggressive plays. Market rallies up to D, we get some good volume. You can see it now coming in on the standard volume as well. This was a little bit choppy in here, harder to read, which is why the Weiss wave can be so useful. We come back down, this is a little bit of a shakeout at support, and your buy opportunity sets up very nicely there. Low volume as we pull back. That takes us up to F. We have a pullback in here, and let's take a look at some of the stuff that's going on in here. So coming down here to 1, look at what's happening to the volume, drying up really nicely, and that's occurring after new high volume in the Weiss wave. And we, again, Weiss wave is showing minimal volume down here. So bar 1 goes underneath, let me erase this so you can see clearly. Bar 1 goes underneath the lows of the 2 prior bars, this bar looking like it wants to try to push down harder, right? Although there's not a lot of volume to it. And then the next bar, bar number 1 here, is a small little key reversal going underneath the lows, coming back up and closing above the lows. And so that's a nice indication that there's been a small flush down. There's been no supply seen down there. And we can now anticipate higher prices. That starts out, and then we get this little large volume bar in here, although it stops right at this line. How come it didn't continue to go down? Next bar kind of tells us we get that little bit of no supply in there, right? The market tries to go down a little. It's actually an inside bar, but just showing that there's a lack of selling in this market. So you could buy this, you could buy we'll talk about entries in the course, but you could buy the high of this, and there's other ways to get in as well. But that is a nice choice trade. We come back into support here, and we see no supply, even after a little bit of a threatening bar. And that's usually a very good indication that the price, that the market's going to go higher when you have this kind of stuff in the background, when you've got good strength in the background here. Okay, and that takes us up to G and towards the end of the day. All right, so let's see what we got here for questions. I'd love to have someone train me to do all the vendors talk, but none of them give you anything tangible. I'm not quite clear what that means. There's also a little effort versus result in the bar after B. Yeah, see, now we're off on a different chart. So A is a spring. What I have, that's not a, this over here, Dennis, are you talking to me about this here? Are you saying that this is a spring here? Let me see if Dennis is still here. If you zoom out on the chart, well, I don't have a zoom out on the chart, so maybe. We're only looking at what we've got. Okay. It's nice looking afterwards when you're at 1 in the moment time frame. How can you guess which way it will go? Michelle, this is all, let me explain it to you the way one of my mentors, Tom Williams, would have explained it. If it's here now, it was there when it was being created. And if you can read the price action now, it doesn't take much to train yourself to read the price action and the volume as it's happening. It takes more, it's harder to do. It takes a lot of effort. It takes a lot of personal training to do this and to do it effectively, but it's certainly doable. Okay. Oh my God, all these questions. Okay, I'm going to keep going because we're already beyond where I was figuring we would be here. Let's take, just want to remind folks that I'll go through all the details of this in a course that we're going to start up next week. It's going to run for 2 nights, if I recall correctly. And I'll explain a little bit more a little bit later. I want to talk more about charts before I get into courses and all of that. All right, so some folks asked about stocks and swing trading. Here's Apple. Let's take a look at Apple. Popular stock, right? Just look at this last section in here. So on bar 1, we're moving up nicely. Volume expands to the upside, price expands to the upside. That's bullish behavior. We expect higher prices. Look at what happens on the next 2 bars though. I've labeled them both 2 because they're basically both the same. We have essentially, we have more volume on each of these bars than we had on bar 1. But look at, we're only making small progress here compared to the progress that we made on bar 1, right? So that's an indication, an early indication here that sellers are starting to get active in this market. But even though we're seeing some effort to go up and less result than we saw on bar 1, we're still closing higher, right? We've got higher high, higher low, higher close, higher high, higher low, and higher close. So there's no trade there. It's an indication. It's the first indication. Now, Michelle, this is kind of the stuff that we're talking about before. We don't look at the market and then try to make a blind decision, yes or no, up or down. That's not the way we do this. We're looking at what's happening in the background here, okay? So we see bullish, possible supply coming in. Bar 3, we go up again. I notice it's still on pretty decent volume, but the volume's starting to get less, right? So what does that signify? To me, that signifies that there's fewer buyers willing to chase price up. Next bar, 4, much larger volume comes in over 3, and actually larger than anything that we've seen from bar 1, from bar 1, 2, and 3, 2 and 3. And look at, we have a level bar here. It's closing at the same level that it closed in the last week. This is a weekly chart of Apple, and higher volume. So this is just like we were seeing before. The market's starting in the S&Ps on the 5-minute chart. The market's starting to cap here. Selling is coming in. Yeah, there's a lot of buying, and we know there's a lot of buying because there's a lot of volume. But unlike on bar 1 and even on bar 3, where we were making progress up on that volume, here we have more volume and we've made no net progress close to close from last month, okay? That's selling coming in. And then the next bar 5, they ramp it up and it gets overbought up in here and then slam it down. Selling starts to come in. That's clear supply coming into the market. You don't see anything like this bar, number 5, all the way up there, do you? No, this is not bullish. If bar 5's volume were all buying, we'd probably be closing up in here, if not going up and closing up in here somewhere. But we don't. We close mid-range. We get a poor close. In fact, it's underneath the closes of the prior 2 months, wiping out the progress of those 2 months, right? And we come down to 6. Now, we notice that we're picking up volume as we're coming down. More supply, picking up volume to the downside, right? Now, as we go up, now we're looking for confirmation. So we're seeing some weakness coming in. We've got strength, potential weakness, real, pretty clear weakness, and very obvious weakness coming into the market, and that's sustained to the downside. Now we're looking to confirm all of that. And we get how do we confirm that? It gets confirmed on the next rally. We get a weak rally. Why do I say weak? Because look at the volume is just dropping until we get up to bar 7, where suddenly we get a large amount of volume and the close is poor. That volume is occurring at the same spot we saw supply come in earlier. This is selling coming into the market. So now, is this a great short in here? Should we be shorting this? Probably not, actually. If we were to compare Apple to the overall market, Apple's making big strides up. What we want is a stock that is showing weaker than the market. So let's take a look at another stock. Here's Johnson & Johnson, J&J, right? On a weekly basis, current chart to yesterday. And underneath of it, I've put the market index. I'm using SPY here as the market. This is the S&P 500 in its ETF form, perfectly fine to use. And you can see that J&J had come into the February highs a little bit earlier than the S&Ps, but they both make the highs about the same time. They both come down. Now J&J comes up, acting stronger than the market at this point, but it hits a dead wall up in here. And now we can see that over here, the S&Ps are trying to push through this line here, this level, this February's highs, February 20th, February 2000, or February 2020, I should say, the highs here, right? So we've been skirting around that, and obviously we're coming down in the S&Ps. So this is showing what we would call comparative weakness or relative weakness in this market. So in fact, J&J would be a better short if we want to do more analysis on this, but it would be a better short than Apple, because as we will recall, Apple was making here's the February highs here, February 20 highs over here, right? February 20, and we're well above that level. So this shows relative strength, comparative strength to the S&Ps. And sorry, I got to get the pen out here. J&J shows comparative weakness, actually pretty much similar to the S&Ps. If we go to Bank of America, though, look at what we have. February highs here, making them consistent with the S&Ps. We drop down. We never come back to the highs up in here, right? We never come back to the highs. And so Bank of America, out of these 3 stocks, and there may be better stocks than this, but out of these 3 stocks, Bank of America, at this point in the analysis, would be the stock we would want to take a closer look at to short. And I think if you look at today's market action, all stocks were down today, or all 3 of these stocks, I should say, were down today. But you'll see that Bank of America and J&J were down more than Apple was down today. So that's a way to use this with comparative strength and weakness. When Wyckoff assessed markets, when Wyckoff would swing trade or position trade when he saw that the market was starting to make a turn, as it is here, right? The main index is making a turn. He would look for stocks that were either weaker to the market if the turn was coming down, which is what's happening today, or if the market, if we were starting to push up in the overall index, we would look for stocks with relative strength, more like Apple, rather than Bank of America or J&J. Why use SPY instead of SP100? I just picked it. That's all. It's the same index. It doesn't make any difference, really. What must happen in the bar chart? to go short? Well, you would read you drop down to a smaller time frame, and I'm going to show you a little bit about multiple time frames in a second, and you would go and do a little further analysis and select it that way. Okay. How do you specifically day trade intraday markets? Do you have specifics we could learn to adopt? Jerry, I'm not sure what that question, what are you looking for? Trade setups. If that's what you're looking for, let me know. Okay, let's keep going here. Let's take a look at multiple time frames. This is really important. And Wyckoff never talked about this, and few people really know how to do it. But it's a really important skill to have, whether you're day trading or swing trading. And as I say, I'm mostly a day trader these days. I like to be flat at the end of the day. So I'll show you on this. This was last week sometime. I forget what day it was. It might have been Friday last week or Thursday. In any event, taking a look back now at the intraday and pairing the hourly with the 5-minute. We can see here at bar C, let me just say this, A was yesterday's high, okay? And in the overnight market, in the hourly, which is here, and then the 5-minute chart is over here. In the overnight market, we see just a real lackluster rally up in here. We come up above yesterday's high, and we basically are having congestion. This is distribution, is what's going on here. But it's making an effort to go higher, but it's just making no progress. Then on bar C, this is the first hour of the US Open, right? We get the market tips its hand, telling us that it wants to go down. In the middle of bar C, or actually towards the end of bar C, as it's coming back up in here, we look to the 5-minute, and we have a nice little indication to go short in here. Market tries to rally up and comes right back down. And we are coming to the close of the hourly bar, and the hourly bar is decisively down. So we're using the 5-minute as a way to enter into the higher time frame, if you will, here. And that comes down, and we start making progress down. We get into congestion down here at D, although we go a little bit lower, and then start to get into bar E in here, hourly bar E, which comes all the way down into here. And we can see on the 5-minute, it offers nice little trading opportunities. We break down, right? The supports here, try to come back up, and it's weak rally. Look at the light volume. There's no way that this market can rally higher through this kind of supply coming in here, which is right here, in that kind of supply, and this kind of supply here on the hourly with this minuscule volume. You see it on the standard volume. We see it on the Weiss wave as well. A couple of different, there are different opportunities to go short here. Bar 2, we start to come down on volume, and then we get a last little bit of a, not a test bar, but a little bit of a coming back up to the bottom of support, which now becomes resistance, and there's a short opportunity there. Another one occurs as we come back up to the bottom of that resistance again, here on bar 3. Notice the rally up looks good on the price action, looks terrible in terms of volume, and that's coming in after good volume on the Weiss wave with E, just as we saw earlier in crude oil going to the upside, right? Good demand. Well, here we have good supply coming in. Now we look for the weak rally, and there it is. So then the market climaxes down here at 4. And look at what happens on the hourly. We get this strong bar here of G, and that ends right here at 2 o'clock. Right? Perfect time for the afternoon rally to start. I'm not interested in anything down here. You could have bought this, but I'm not really interested in that. We've now made higher high in here, good strong bar on 5-minute bar on 5, right? And then we go sideways. This is almost like absorption. We're holding gains in here, but we get this beautiful little key reversal as the market comes down to 6. The volume is negligible, the Weiss wave showing no supply. Then we get the key reversal, again, going underneath supports, flushing a little bit, coming right back up and closing above supports. There's your, and it does so on a pickup in volume, indicating that buyers are coming into the market. And there's your entry. We get a similar situation. We rally up, we come back down into this area. Not so clear in here, but we don't get any volume coming to the downside. Weiss wave is low, and we're still making higher highs and higher closes and higher lows on the hourly. As long as we're doing that, we can continue to trade to the upside. Final nice little trade in here at 8. Again, as we come down, no supply, and we pick up some, not a key reversal, but a couple of bars in here. In fact, I think I went long right in here, got stopped out. I had my stop too tight, just got stopped out, and then I re-entered in here the other day. And then we come back up to F, which is the, I'm sorry, not F, I here, bar hourly I, back up to yesterday's high. And if we put a little trend channel on this 5-minute chart, I think I did that, did I? Yeah. We're at the top of the trend channel up in here. So we've got 2 sources of resistance telling us to exit our long trades for the day. And that's how, one of the ways I use multiple time frames. Some nice trade setups occur off of this as well, using the hourly and the 5-minute chart. So let's see. Is it better to use the hourly chart over the 15? Well, yeah, because I'm looking for bigger. I want to, when the hourly turns, then it turns, you know, if you're trading the S&Ps, typically you get 2 or 3 good legs a day, 2 or 3 good swings a day. This one has 1 and 2, okay? And frequently we have the morning session up until the noon period. Then we get the noon hour, often goes sideways. And the noon hour typically runs till 1:30 or 2 o'clock in the afternoon. So it's really an hour and a half to 2 hours. And then typically we get if a trend is going to occur, it's going to start somewhere between 1:30 and 2. And the hourly really pegs that so nicely. And so the 15-minute would be too small. You've got 4 bars in every hourly bar. The hourly bar is what's showing you what the direction of the market is going to be for the next, at least the next hour, right? So that kind of question says to me, you're looking to get every little possible trade going, and you're kind of anxious to get into the market. You're eager kind of to get into the market. Man, I would give you the best advice that took me a long time to learn personally. Just chill, man. Just chill out, just relax and wait for the trades to set up and come to you. Don't be trying to make it happen. You're not going to have an effect on the market. None of us are. We're way too small. So we're riding the coattails of the bigger players. So let that occur. How about the bigger picture? Would you zoom out 1 hour and see the background? Sure. Yeah, that's why I said that's why I started this. This is yesterday's high. This is the daily high in here. Okay, and we can't get over the daily high, and then we just come right back underneath yesterday's high. So you've got the higher time frame going on there as well, the daily time frame. Why didn't I enter at 5? Yeah, you could. You could. That wouldn't have been a bad entry. That wouldn't have been a bad entry. That would have been okay. 7 is better because you've got clear. You're now up above the highs over here. You've got a clear higher high, right? You got, I think this is a higher low. Yeah, higher low in here, and actually another higher low or a small. Just forget this one. Just call this a higher low. So now we're looking for that higher low to occur or another higher low to occur, right? That's the definition of a trend, my definition of a trend. It's also occurring where we saw a tremendous amount of trading earlier, right along this line. And so that's meaningful to us. It tried to act as support, then it's resistance, and now we've broken through it and we're coming back to test it, right? So that's very useful. That's, again, you could do 5, but I'm showing you choice trade setups here, high odds trade setups, rather than trying to get every little wiggle and waggle. What's the advantage of Weiss wave over just volume? Yeah, it's a good question. We don't quite see it here. You can kind of see it here. If I'm looking at this, even in the very doldrums of the noon hour, you can see that demand is stronger than supply. The green is bigger than the red, right? That's a little hard to read in here. Typically in the intraday, we will get what's called the volume smile. We get large volume here in the morning and then large volume in the afternoon. But it gets small in the middle and it kind of tends to taper down into the morning, and it builds up if there's an afternoon trend. So we call that the standard volume smile. This just makes the volume a little bit easier to read. Here we know we have good supply, no real demand in here. More supply comes in. Now we have some demand, but look at what it does. It can't get over the top of the resistance there. And then more supply here. So, and that comes in at this point. So that sets us up for a nice trade here. That's kind of hard to read. It's readable, but it's harder to read this, is what I would say. The Weiss wave makes things much easier to read. Okay. If something disrupts the smile, like it happened in 4, that's important, right? Yeah, here we have abnormal volume coming in, and we'll talk about this in the course, but in the middle of the day, that's unusual. What does that mean? Well, this was climactic, and that set the stage for the hourly to go up and then the afternoon trend. If bar 7 had lower volume, would you say it's no supply? No. No. Bar 7 is a key reversal bar coming underneath supports and closing above. It's bullish. No supply would be bullish too, but the higher volume just means that the higher volume with the close just means that buyers stepped in aggressively in here and bought the market. That's all it means. Weiss wave setting is 3/4 of a point for the S&Ps. It varies for different markets. Okay, so let's take a look at reading price action on a monthly chart. This is cable or the British pound. We were tracking this in deep practice. I'll talk a little bit about that at the end too. But notice how we're coming down very heavy volume at A. At B, we see the range kind of narrow. We're still coming down, right? But the range narrows here and the volume drops off. So what does that mean? Well, maybe sellers aren't as enthusiastic as the downside as they were up in here, or buyers now see at around 1.2, 1.25 area an opportunity. They think that the larger players think that prices are low enough to purchase. And notice what happens. I labeled these C. All these are nice up bars, and every single one of them have good. Well, this one doesn't, but all out of 5 of these bars, 4 have good volume. Right, so that takes us up. to bar one, which looks a little climactic to me, right? Widespread bar going up at the end of the trend, coming into supply, and we could even draw, trend line across if we wanted to, but I wanted to keep this clean to indicate that there's resistance there. But the key thing is that it's coming into supply, that bar A. Bar two, we don't see volume dry up, do we? We don't see a test in here or a no supply bar. And instead, what we see on bar three is lighter volume, signifying less demand. Doesn't this look similar? Doesn't this look familiar to what we saw on the 5-minute chart in the S&Ps earlier? That's why I said, Albert, look for those patterns. You'll see them. You'll start to see them on all these different time frames. And then we get, this might have been a little, yeah, it was a little up thrust in here, but bar four is supply coming in, wiping out all the buying that occurred in the prior quarter, the last 3 months, in the Great British Pound. So that brings us all the way back down to the bottom here. We see volume expanding to the downside here. This is a little different, right? We see it coming into the downside, and yet on bar two, we have that narrowing of the range, high volume, signifying that this is unlikely to break this because buyers are now starting to step in and keeping the range narrow, keeping the sellers from pushing it down lower. We get a tiny little spring here on bar three, but again, bigger volume pushing up, and we push on, and then bar four, we get nice volume coming in. Market stops at 5, and then we get this wacky bar here, G, kind of unexpected. It's coming down, but this was the actual spring that occurred. Now, mind you, this is in February or March, I think this occurred. This is March of 2020, this year. We're springing something that's 4 years old, right? 4 years ago, we get that nice spring down in here. That low gets painted, or 3.5 anyway. So on a monthly chart, go back in time and look for, don't just put up a couple of months, go way back, go put a few years up. Anyway, so we start to push up. Again, we bar two, we get that narrowing of the range in here on fairly sustained volume, a little bit less volume, but kind of sustained. And we're back up into the resistance here at F and this area here, these highs here. And we get bar H coming down. And now the last bar is an inside bar, high volume. Looks like this market wants to try to go down a little bit lower. Maybe this G was a big bar, and I suspect that it has not been fully tested yet. And when we did come down to test bar 4 here, I'm sorry, bar 1, we get higher volume coming in. So this suggests that we want to go down a little bit lower and test again, though we would want to look at this lower time frames, the weekly and the daily, to get a better handle on this. This gives us our kind of rough idea, and we get more refined idea from the lower time frames. You got to recommend them to deep practice based on the questions. In less than 2 months, it changed my trading and winning percentage so far for October for the first. So let me talk a little bit about what we do here. Starting next week, I'm going to teach this in detail so that you will be able to read this. All right, and this is the premium bar by bar market trading techniques. So I've got a list of stuff that we're going to cover. What did I do with it? I'll just run through quickly what the high volume and abnormal volume activity means, like we were talking about a moment or two ago in the middle of the day, right? Low volume, what does that mean? What does dullness mean? How about climactic action? How to tell if a pullback is likely to continue the trend? What bag holding is, what capping the market is, and where they show up. What to look for that creates the end of a move and the beginning of a pullback. How do you know when the market is about to pull back? There are very clear signs and signals for that. Absorption and absorbing supply for a larger move up. What does that look like, and how do we determine that? More on the Weiss wave for sure. Things like shortening of the thrust, effort versus result, clustering of closes, signs of strength, signs of weakness, key reversal bars, all of those things that we talk about and use as principles in the Wyckoff. We'll talk about no demand, no supply tests, springs and upthrusts, what to look for when the market changes its behavior. Those key indications in price and volume that tell that this pullback is likely to be a bigger pullback. We saw that in the most recent pullback, daily pullback on the S&Ps. From the most recent highs, if you look at the pullback in the S&Ps, it's very clear that that the supply was getting dominant. We'll talk about momentum and new momentum. We'll look at multiple time frames and all of that stuff. All those good